And now, ladies and gentlemen, as we prepare for our final plenary for today, we're going to be looking at structural profitability and what that actually looks like through this conversation, and the levers that we're going to have to continuously pull to ensure that we certainly do stay on track. Leading this robust conversation, I am going to call upon Mr. Gasao Konate, who is the Consulting Director for Technical Operations at AFRAA, and he is also going to introduce his panelists and the presentation that comes forth. Might we welcome him with a round of applause, ladies and gentlemen.
Good evening. Good evening. Okay. I know we have a very difficult situation. We are between you and the end of this. So you heard Sanjeev indicated cost is our very first challenge. So our challenge will be looking at how to cut costs, because it's obvious we need to cut costs to be able to continue to have a structural profitability. So our panel will address that. I will call upon my panelists, Mr. Ira Kaviti, Chief Finance Officer, Jambojet. Omar Kindo, Group Head of Aviation, Vivo Energy. We all hear about fuel, particularly in this period. Dana Amureg, Business Development of Moreva. And my good friend, Alex Avedi, Chief Executive Officer of Safari Link. Definitely we will address these three sets. The first set being how to maybe stabilize cash, fix revenue, and protect reliability. The second set could be improve cost based on revenue quality and operating model. I think you heard about all these things. And if we look at maybe long-term, renew fleet, scale regional capability, strengthening resilience. So these are what we are going to cover. To set the scene, I will call upon Mr. Ira Kaviti, the Chief Finance of Jambojet, to make a short presentation, which will set the scene, and then we will have question and answer. Ira.
Thank you, Gauso. In 2024, Jambojet turned profitable after COVID and received the AFRAA award for the most improved airline in profitability for that year in 2025. And that is the reason why AFRAA asked us to make a presentation today. And I think a lot has already been covered. So the turnaround was from between the loss the previous year and the profit in 2024 was around $49 million, which for a small airline the size of Jambojet was considerable. So I just wanted to make a presentation on who Jambojet is first. 12 years old, it's a low-cost carrier founded by Kenya Airways, specifically to protect Kenya Airways from attacks by other low-cost carriers. And Jambojet's tagline is "Now you can fly." And that is because the airline was founded to enable first-time flyers in Kenya. 45% of all first-time flyers in the country are flown with us. And at the moment, we've flown over 10 million passengers in that 12 years. over 600 employees, 2 hubs in Nairobi and Mombasa. We enjoy 57% of the market share and have won several awards. We fly to 11 destinations. The Jambojet story has been an interesting one. In the years before COVID, the airline was trying to prove that the business model of a fast carrier, a low-cost carrier in Africa can work. And after COVID, it has been recovery and consolidation. And during that time, there has been many wins, many losses. COVID alone, during COVID, that period, Jambojet lost $20 million. But it survived and lived to tell its story. One of the most maybe unappreciated stories from that time is that the staff opted to take pay cuts instead of having anyone retrenched. That saved the airline $7 million. I will not go into what the low-cost business model looks like, what the drivers are, but some of the highlights from the last few years has been the ability of the airline to raise capital for the first time in 2024-2025. It's currently raising capital for the second time, successfully renegotiated aircraft leases with lessors in 2022-2023 and completed the exercise in 2025. Has been going through balance sheet restructuring with the support of Kenya Airways and is nearly completing that. So one of the foundational DNA aspects of Jambojet is that it was founded on the backbone of a strong internet penetration in Kenya and mobile money. Before that, Kenya Airways had tried to start a low-cost airline called Flamingo, and that collapsed. And there is a heavy digital DNA to Jambojet. 80% of our revenue is direct. 99% of our payments come through electronic channels. That includes mobile money, 57%, 21% in cards, and 10% through other online transfer methods. And the airline sells on cash. And that has been important because it has funded its growth for the first 11 years from working capital, from own sources, no borrowing. We've been trying to get our passengers to accept online check-in. At the moment, we have a 40% adoption rate, but this is growing very fast in the last 2 years. As other airlines, we already know we are into dynamic pricing and trying to enhance it with AI. Recently, 3 years ago, implemented a fuel control and monitoring system. We know that if every single aircraft in Jambojet, for every flight it operated in a year was late by 1 minute, we lose around $1 million. So if they are all late throughout the year by 10 minutes, we are talking about $10 million. And that means there is a lot of effort that is put into enabling the operations team access to data that shows the performance in terms of flight efficiency, time taken, fuel burn, how much we are losing or how much we are saving. Passenger communication and feedback, that has been at the heart of our success. This started the same time the airline was starting. We know all airlines have disruptions, but when customers get information about the disruption in time, they might be able to salvage their day and their time because we are in the business of selling time. Recently implemented an integrated operations control center that brings together the operations teams. So they all sit in the same place. The people that are monitoring flights in all stations the maintenance teams, the dispatch teams, because we realized that communication caused a lot of delays for us. And we've seen, as a result of that, we've already seen an improvement in OTP. In January this year, Cirium rated Jambojet 5th globally in terms of on-time performance. I will talk about people last, although I should have started with that. So we are using digital means to optimize our schedule. You've already heard about the challenges with fuel. Jet fuel has gone up 97% during this crisis. And what that meant for us is we had to act quickly, optimize our schedule, reduced capacity by 10%, removed flights that do not meet the first contribution, are not able to pay for fuel, maintenance, insurance, reservation costs, parking and navigation fees. And hopefully, in the next few months, that will allow us to start pricing up again. Culture, I said I would talk about this last. I think this is really at the heart of the airline. Jambojet is a productivity-based business. And being productivity-based means that a large number of our employees put in a lot of effort in this. Less interest in unionization, because if you perform more, you get paid more. In times of crisis, employees have led the organization initiatives in helping recovery. We estimate that from the fuel crisis alone, we are going to lose 2 billion shillings this year. But through employee-led efforts, we've identified initiatives to reduce that impact by 55%, to reduce that effect by around 1.2 billion Kenya shillings this year. That brings me to the end of the presentation on Jambojet, and over to you, back to you, Gauso.
Thank you very much, Ira. So that set the scene. You have seen a company making money, so controlling costs to be able to, so congratulations. I will start by asking questions to the panelists. I will start with you, Alex. So my first question is, what are your non-negotiables on route's contribution to cash conservation?
Yeah, so really the route has to meet, like my good friend at Jambojet just mentioned, the first contribution initially. But typically what we'd like to do, this is from a marginal costing point of view, where we have, if we're looking in terms of idle capacity, and instead of, because we have the plane, we have the pilots, so then we can plug in an additional flight. And we do that. So it's not necessarily that the flight has, in that instance, to make money. There's a thing about optimizing our assets. So we do that. But you can't, again, live on marginal contribution. So the route within a year should actually be able to meet all its costs. Now, because of that, now, incidentally, we have two businesses. So we have the safari business, and that actually we're the biggest safari airline in Eastern Central Africa. So the safari business is very different. There are other considerations, and for a lot of people, it's just cheaper than a charter. So the cost is neither here or there for the people who want that sort of service. So they'll basically pay you almost anything to get you there quickly and safely. For our domestic business, then that's what I'm referring to. Now that's the other business that is very, very price sensitive. So mostly my presentation as I speak is really about the domestic type of business where we are flying to a lot of the routes in Kenya. So by way of introduction, we have 19 destinations that we fly to, and 16 destinations in Kenya. So we're actually bigger than KQ and Jambojet in Kenya in terms of destinations. So anyway, coming back to that, so we'd be looking that the route really needs to be making money, but we're very, very cautious. So we do not open routes just like that. So we really, really study the market. We also allow our good friends Jambojet to do the heavy lifting. And so again, I'd like to thank Jambojet because what they do is, and they do it really well, they develop the route. They spend a lot of time and money and effort in developing the route. And then our product is very different from theirs. So therefore, they have taken all the risk, they've created all the data, and we come and help them now to make the route even, to increase the pie, so to speak.
Okay. Now, I will move from Alex because we are all focused on energy. So, Umar, I'm coming to you. Okay. So, what are practical steps airline can take with suppliers, airport, to reduce into-plane fees, improve supply reliability, and reduce operational fuel waste?
Okay. Good afternoon, everyone. Good afternoon, Mr. Konate. Thank you for your question. And maybe before I jump in the question, we have to understand when you are saying optimizing fuel cost and reduce probably the topic doing this profitability, structural profitability. It was during the whole day we heard about in Africa, airlines are going through many kind of disruptions, many kind of elements. So basically, when we come to say reducing this cost, it's not only that, like, say, we are going to reduce cost. Discipline for cost is already there. So from our perspective, and also when we are talking about Vivo Energy, with our network being in this, let's say, 28 countries now, 29, and also basically almost 38 airports, we are able to come with some solutions, and we are able to give some ideas. They are not really, let's say, we are not reinventing the wheel, but it's the same practices. So when I say, I came back to the question, basically, I would say in 3 steps, simple steps and 3. The first one is basically to simplify and standardize the process. Okay. Complexity will bring, let's say, waste and cost dilution. So when you have a lot of process, when you have scattered, let's say, elements which are not really streamlined and standardized, you are wasting cost. You are not seeing it because it's small cost, but in the fact, at the end, you will end up to the kind of big, let's say, impact on your profitability. The second one is, again, coordination and planning. For sure, when you said you standardize, but you have to make sure that you are coordinated. The captain is in the plane, he has to plan what he's taking as fuel on the ground. When he's coming, he has to make sure that the fuel is available. So it means that we as fuel suppliers, we have to be informed and then also be able to plan what is needed for this airplane. We underestimate the waste or maybe the impact of this misplanning or misalignment between the airlines or maybe between the operators and I would say the service providers, because we consider ourselves as service providers but also as partners at certain level. If we have this misalignment, the impact is straightforward, is the high cost which will come there. The third one, and maybe let's say basically not the underestimated one, is let's say the optimization of the routes. I'm talking on, let's say, from the fuel supplier side, or maybe from the service supplier side, not only looking at the commercial one, but we know that for the airlines, they have to estimate, to evaluate the right aircraft for the right destination, the right route, and also to come and pick the right fuel, I would say, when you ask me about energy. So no overfueling, no underfueling, so that they won't want to say, I have to go to the next airport to catch up for the fuel. So if you ask me what is needed to reduce, let's say, the into-plane fees, I would say, actually, we should not just look to reduce these fees. We have to go upfront to optimize the whole ecosystem, to make kind of partnership, an inclusive partnership, I would say, between the on-the-ground people and also the airlines.
Thank you. Thank you, Umar. I will go now to Dana. So, Dana, where can airline gain better control and visibility to navigate today's operational and financial complexities?
So hello everyone, good afternoon. It's my first panel, so I'm a little bit stressed, but so I'll try to answer the question.
Yeah.
And before that, since this morning, we have been talking about disruptions. We have been talking about complexity. We have been talking about the crisis situation happening in the Middle East. And all of these, I think, it brings us to taking more control of your cost today. Cost is due to the uncertainties that we're having, due to the growing cost that airlines are facing, it is becoming more and more important to implement some control in your cost. And before that, I would like to talk about two complexities that many airlines are talking about. And Ira mentioned it before, and I'm happy to hear that you have been able to take control of these challenges and action it properly. So the first thing about, the first challenge I would like to talk about is that operational and financial decisions are managed into silos. You have your commercial team. Your commercial team would be working on your revenue. You have your operations team. They would be focusing on punctuality of your operations. The finance team would be working on your cost. And your maintenance team, they will be working on the fleet availability. So each and every one, they have their own role and responsibility at the airline. And whatever operational decision is made, it has a direct impact on your finance, on your profitability. A simple example we all know is a simple flight delay. Your flight delay, it affects your recovery cost, your passenger recovery cost. It will affect the fuel consumption if ever there is a change in the type of aircraft that you will have to replace it probably. And the fuel consumption linked to it, the flight schedule, all of it finally affecting your customer expectation, your customer satisfaction. So this is one challenge that we are all facing. Another complexity of the industry is that the consequence of operating in silos is that there is no centralization of information. What I mean, I would like to take an example of when you have all your costs, when you receive all your invoices from your suppliers, each and every one, they have their own processes because it is sometimes being taken by, it is sometimes being handled by different departments. Let's take the example of stations. most of the stations, when they receive their invoices, they will have their processes. And when they have their own processes, when it is decentralized into stations, what happens is that there may be inconsistencies in processing these invoices. And when we say inconsistencies, it may mean also that there is weak control over controlling these invoices. What happens about all your master data? Do these stations have the proper contracts? Can they verify that what has been invoiced to them is proper? Are they able to match the invoice with the contracts? Or the workings on your invoices, how do you know whether this invoice for fuel consumption, let's say, is appropriate? Does it match the aircraft that flew on that flight? So these are the complexities that we have seen. And as a service provider, Moreva, I think we can help airlines navigate these complexities. Because the solution that we provide, KEOPS, the DOC solution, the direct operating cost solution, everything is centralized. All your master data is under one platform. All your team, your finance team, or maybe your station managers, they will have access to all these information before they do any processing. Be it your private contract, being your public contract, or your aircraft specificities. So under one platform, having all these information, this consolidated visibility, I would say, it can give you better control to navigate today's operational challenges.
Okay. Thank you. Now coming to you, Ira. So, I know you mentioned some of these things, but I will ask you this question. Where can airline get which operating discipline most directly translate into structural benefit? Is it turnaround standardization? Is it crew productivity? Is it fleet commonality? Direct distribution? And how do you maintain them through growth?
Thank you, Go. So I must warn that you've asked this question to somebody that has been in aviation for only 4.5 years and only worked in a low-cost carrier. And so my responses may not apply to legacy carriers. Yes. But I must say that that to me sounds like choosing between your children. I think all these 4 operational disciplines are important. They work in concert. And when you get them right, it translates to profit. Because behind these principles is simplification. Simplification very easily translates into profit. If I was to consider turnaround time, most African carriers operate in airports that have a time limitation. They can only work during the day when there's daylight. And that limits utilization of aircraft. That means that if you are to consider the turnaround time, for example, Jambojet's turnaround is 20 minutes. This year, Jambojet will operate 25,000 sectors. If you increased the turnaround time from 20 to 25 minutes, that would lead to 2,083 sectors less operated. In terms, if this was at a load factor of 80%, in monetary terms, that is $24 million lost in revenue that year. So that means that you must get the 20 minutes. And this is one of the biggest fights in Jambojet, with, of course, the ground teams wanting a longer turnaround time. And everybody else saying that you need to sweat the assets. We need to make most of the time that we have to utilize the aircraft. Talking about fleet commonality, we only operate the Q400. I've not been in an environment where there was a different type of aircraft. But I can tell you that straight away, because I talked to my peers in other airlines, that I know that our cost of acquiring, storing, utilizing aircraft parts would be much higher if we operated different fleet types. I know that in terms of staff training the crew, training the handling teams, training the customer service teams, training the revenue management teams, maintaining systems, I know that our operating costs would definitely be higher if we operated more than one aircraft type. Crew productivity, which I've said is in the company's DNA, the average Jambojet pilot operates 85 hours every month. And we see that in this time of a very high attrition, whereby low-cost carriers have really become training grounds for legacy carriers, and especially the carriers from the Gulf countries, that is very important for us. When these guys join us, we know they are going to be with us for roughly 3 years, 6 months, before they get the number of hours they require to go and fly bigger aircraft. And that has proven to be the case. Now, we are turning what used to be a crisis for us into opportunity, because then we are able to attract these guys to come to us as first officers with around 3,000 hours. They stick with us for those 3 years, 6 months, knowing that they are going to get into bigger airlines. So we are no longer lamenting about it. We've accepted the challenge and we are dealing with it. You mentioned a fourth factor.
Direct distribution.
Direct distribution, yes. We did mention that we sell directly. Most of our sales are through online means, our website, or agents that are connected to us through API channels, extending beyond Kenya into Europe, America, Asia. And the cost, of course, of distribution, when you are using direct methods, especially if it's your website, it's lower. We've been exploring other means. We've seen airlines selling through websites, through channels such as WhatsApp. And we have been also piloting that. It's working well. And we know as the customer becomes younger, because our average customer is 29 years old, they prefer service in their hands. They prefer to book using mobile phones. They prefer to book using their laptops. So we are trying very hard to give them the ability to service themselves, from booking to check-in to when they complete the journey, by putting them through our apps as well, the Jambojet app.
Thank you very much. Initially, I had prepared a second set of questions. I will not go to that because I'm looking at the time there, which is showing me that we have 13 minutes left. Rather than that, I will go to the floor and ask if you guys have questions. I can take maybe a couple of questions, then we will wrap up. Any question from the floor? Don't see. Huh?
Thank you. Ketano Michael from Eswatini Air. My question is actually for Moreva, and I would like to congratulate all the airlines there for a fantastic job. In your experience, what is the highest percentage of cost saving you have realized for an airline through your system? Thank you.
Thank you. It's a very interesting question, and it was supposed to be on my second reply to you, because on the second session that we had, there is a case study done with an AFRAA member, Nouvelle Air. So with Nouvelle Air, we have done, the study was done in 2025 based on their 2024 figures. where they are an aircraft. They have 15 aircraft, A320 today, and they, on a year-to-year basis, they process more than 8,000 invoices for 250 suppliers, around 250 suppliers. And the total amount of cost that they manage through our system is 350 million euros. And in 2024, they managed to recover 1% of the total cost through our system. So 1% of that cost equals to 3.5 million euros. And these were the claims sent out to their suppliers. So out of these 3.5, they managed to recover 87% of it. And this 1% is more or less equal to what IATA as well shared with us in one of their studies. I think it was in 2022, if I'm not wrong. So generally, if you refer to the figures shared by IATA, or if you take your total DOC cost of an airline, I think an airline can recover minimum 0.5 to 1% of their DOC. Why I say 0.5? Because your total operating cost represent 50%, your direct operating cost, represent 50% of your total cost, more or less, depending on airlines, depending on regions. So a quick exercise, if you can do, you take your total cost, and then if it is managed properly, if it is controlled properly, if you have all your information, all your master data handy, I would say, everyone is well informed of your process, your processes are centralized, you have the appropriate control over it, I think you can recover from 0.5 to 1% of all your total cost. I hope this replied to your question.
Thank you very much. I think for us to wrap up, there is a burning question here. There is a burning question from here.
It's from this side.
Oh, from this side. Okay.
Thank you. My question is directed to Jambojet. I think it's a great story that you have shared with us. What I wanted to ask is, in terms of your direct sales penetration, is it that driven by your proactive initiatives, or it's more on the maturity of the use of mobile money and internet in Kenya? And also, I want to believe that you still have a big travel agency community within Kenya. Are you selling purely directly, or there are some enablements that you have done for the travel agency community? Thank you. My name is Emmanuel Hlongo, by the way, from South African Airways. Thank you.
Thank you for your question. So Jambojet was launched on 1st April 2014, April Fool's Day. It was launched online. There were tweets, and there were the promotion of the website. And if you come to Jambojet, you will see it's carved into the landscaping. So from the very get-go, there was a strategy to drive web sales. And that remains true today. It is supported by a strong internet penetration in the country, and the penetration of M-Pesa, the mobile money platform from Safaricom and Vodacom. And I would say that there have been a lot of effort, though, to change the distribution method at different times in the company's existence. But because it's part of the DNA, you have to remember always why you went for direct distribution. We love our travel agents, and we wouldn't want to drop them. And we love our corporate clients, and we wouldn't want to drop them. However, because we sell on cash, what that means is that our agents buy from us in cash, and our corporates buy from us in cash. They deposit money through the portal and are able to get access and buy directly from our booking engine. And I can tell you that I joined when web sales alone contributed. The direct company sales on the website were 60%, and that very quickly started dropping and dropped to 54%. And then the fighting started, and we said, no, we need to capture this. But we also had advocates for, no, we want agents to have a bigger say. But it does come down to what is the lifetime value of your customer, and who owns the customer. Is it you, or is it the travel agent? And it is because it's a profitability fight, we realize that anybody can sell through our website, and that is what we are trying to enable them to do, to the extent that we've been working with banks to help them fund their deposits in our website, so that nobody has an excuse not to sign up and use the online channels. Thank you. When I joined in 2022, cash was 4% of payment methods. It's right now it's 1%, and I think by the end of this year it could have reduced to 0%.
Okay, I think that's respond to your question. Now, for us to wrap up, it will be you taking note of what these experts will give you. So for each of you, so starting again by you, Alex. So what do you want, what is really your takeaway on this if you want them to take one measure for cost cutting? Which one are you going to suggest? So we have 1 minute per panelist.
Yeah, I think a lot of airlines, in my view, suffer from delusions of grandeur. So you buy outsized systems, aircraft, everything. And because our business is considered fairly prestigious. But unfortunately, in our environment, a lot of this is run by, in my view, amateurs who don't understand the cost that when you buy an aircraft, it's a 20 to 30-year investment. And really, you're tied to it, and returning it is not that simple. Once you understand that, and once you get off your high horse, and you become very practical, it's not that difficult, to be honest. Thank you.
Dana.
Yes, so as a key takeaway, moreover, as a service provider, I think airlines, you have a lot of data. You have everything handy. And I think you should use all these large sets of data that are fragmented, that are decentralized, and use it into actionable operational and financial intelligence. Automate processes, use AI, use solutions on the market to help you gain that competitive edge, have that global visibility that will make you implement stronger operational control. And this, as a service provider, this is my takeaway to everyone. I'm here. I am open to discussion at the gala dinner as well. If you have any further question on DOC, I'm more than happy to discuss with you.
Thank you. Umar.
Yeah, thank you, Mr. Konate. Let's say, I mean, from my takeaways, like from our perspective, from what we are seeing in the international or globally what is happening, we can say and confirm that cost cutting or maybe cost resilience for African structures, airlines, and everything is not the challenge. It's almost there structural. So for me, if we are talking about optimization, it's more about performance optimization. So because if you look also from the reality, you at certain point you cannot cut cost and cut cost. So basically the idea was, how can we do this performance development? How can we improve our performance? How can we have efficient systems? How can we control? How can we really maintain our operations? Because today, the most value is not in the, let's say, I would say the big decisions or maybe the big, what is happening. It's almost in the small, you are taking the small decision, the delay which is coming, and then you automatically take the decision, I would say, in a reaction, not in a predictive way, not in a sustainable way. And we can easily see that sometimes when we are reducing costs here and there, at the end of the day, some of not only the airlines, but some of the structures, they find themselves in troubles because some small leak was not identified. So, not being long, I would say 3 main things that we need really to maintain and keep in our head. The first one is the operational reliability, on the ground, in the air, and all the airports. The second one will be the utilization, the asset you have, how you will optimize it, the right aircraft, the right route, the right fuel quantity, and also the third one, the partnership, the long partnership, and also the value creation. Sometimes it's not only about cost, it's not only about the fuel price, it's about operation continuity, it's about reliability, and also we are talking about aviation, it's about safety. Thank you.
Thank you, Omar. Ira.
Allow me to go beyond the cost cutting, as the theme has been the whole day. Some see an empty glass, some see a glass that is half full, some see a glass that is half empty, but I would like to urge everybody to see a glass and a half full instead. You have the glass, and it is half full, a glass and a half full. That is the optimistic view. We are in a continent that has the biggest aviation potential at the moment. The youth dividend in Africa is unprecedented. The young people do not care about physical assets like we did and our parents did. They care about experiences. The commercial teams have for a very long time marketed aviation as something prestigious for the lucky few, but we need to take that back. We need to tell everybody, including the commercial teams, that aviation is a necessity. It is a driver for growth, industry, tourism, the economy. If we sell that message well, governments will understand why they don't need to tax aviation as much as they tax it. They will understand why they need to open the skies quicker, faster, and I think everybody is going to be a winner. Thank you.
Thank you very much. So I've been looking at the screen, and I know if we have 15 minutes, we have to put it in the logbook. We have just 2 minutes, so there is nothing to write in the logbook for the delay. Thank you very much, the team. I think if you look at each of their intervention as a stream, they all flow to a river to make profitability. Thank you very much.